Hey, I want to thank everyone for attending. This is Washingtonians for Public Banking's third virtual town hall, which is your opportunity to learn more about public banking and financial reform. My name is Mark Rosero Rossi. I'm the executive director for Washingtonians for Public Banking. We do have an excellent speaker for this virtual town hall. But before I introduce her, I do want to let our supporters and followers know about some upcoming events that our organization is sponsoring. They are available in the chat right here. So we do having our buyout annual coalition meeting. If you want to come to one of our coalition meetings and discuss the work we've invested in to try to promote public banking in Washington State and what we're doing on the legislative level, you can do that. We're going to be meeting on Tuesday, June 24th at 6:30 at Casa Latina up in Seattle. And then 2 days later, on Thursday, June 26th, in Tacoma, they're going to have Tacoma Cooperative Culture Night, and I'll be a speaker for that event, and that's going to be at 5 p.m. at Common Good in Tacoma. Now, without further ado, I would like to introduce our speaker for this evening. Um, we have Alphecca Muttardy. Alphecca Muttardy is a former macroeconomist with the International Monetary Fund, but how she spends a lot of her time these days is promoting the National Infrastructure Bank. She works as an economist with the Coalition for National Infrastructure Bank, and she's going to spend time talking to us about the importance of creating a National Infrastructure Bank here in the United States and what are some of the legislative progress we've had on that front. So without further ado, go ahead, take it away, Alpaca.
Great. Thank you very much. And it's a pleasure to be with all of you again this evening. I think we got together about a year ago and discussed the National Infrastructure Bank. So I'd like to give you a little update on where we are with the bill. For those who don't know too much about the background of the bank, I'd like to step you through how it works. It's along the lines of public banking institutes promotion of public banks. It works as operates like a public bank. And then tell you a little bit about what it's going to do for Washington State, where we are on the economy, not doing so well, and how the National Infrastructure Bank can promote economic growth both in the long run, really bolster and beef it up. And then also, we're having a lot of adverse reactions in the economy right now. This can help with those short term. It could lead to a recession. So this could help with those short term fluctuations as well. So where we are with the bill, and that's the wrong button I hit. Sorry. And I will send to Marco a set of these slides. I know he's recording it, but if you want to see the slides, I'll send a set of them to you, and that might help you. So where we are on the bill, the bill was in the last Congress, which ended its session at the end of December. That bill had the number, each session it gets a new number, but it had the number HR 4052. What the legislation does is it creates a $5 trillion public bank to lend for infrastructure projects all around the country. And we always get asked all the time, especially by, Republicans, why do we need this bank? And the reason we need this bank is because we cannot finance infrastructure adequately by the normal three sources today, which are the federal budget, the state and local budgets, private capital money. They aren't working adequately. And the proof of the pudding, we just came out with a new report card about a month ago from the American Society of Civil Engineers. They do a report card every 4 years. And what that report card found was that the unfunded gap for infrastructure has grown in just 4 years by an additional 40%. That's a whopping big number, up to $3.9 trillion. So this bank will cover all of that unfunded gap in infrastructure that the ASCE measures and top up all the financing that we need to fix everything. When this bill expired, it had 48 members of Congress on board, including the main sponsor, Rep. Danny Davis from Chicago, Illinois. All these members of Congress uh, go across they happen to all be Democrats. They go across the spectrum from the squad and progressives to very conservative Democrats. All of them recognized that the bipartisan infrastructure law from the Biden administration, it was a great start, but it was too small, rolled out too slowly, did not beef up the economy in ways that were expected just because it wasn't big enough. And it was kind of proof that we can't fund all of this infrastructure through the federal budget. What was I going to say next? The way we got these members of Congress, we're part of a grassroots campaign across the nation. So we also hold Zoom meetings once a month. I think maybe some of you might get invitations to that. But if you want to get our invitations, you can sign on to nibcoalition.com, and then they'll send you each month the invite. But the way that we got these members of Congress was no small secret. I mean, our grassroots campaigners in every state went to their local legislators, talked about their unmet needs in every single district, whether it was a Democratic district or a Republican district. We listed them all. We put it into resolutions in the state legislatures and to bring attention to the need. And then collectively, the grassrooters and our coalition and the legislators went to their members of Congress and just pestered them until they got onto the bill. And we expect to continue to use that great technique when we reintroduce the bill. Now, the reason we haven't done it so far is because for the last 6 months, we've been trying to talk to Republicans to see if we could get one to come on the bill. They're still very much wedded to the Trump agenda, which is tax cuts and cutting spending, cut. That's not going to get us where we want to go. It's not going to build the economy. And I'll show you in a minute. The only trick to building the economy is to spend, to find a funding source for infrastructure financing. That really is the secret sauce to grow the economy. So the proof of it is we've had four really large banks like the NIB before in our nation's history, starting after the American Revolutionary War and going through the Great Depression and World War II. These banks that were huge built huge chunks of our nation's infrastructure, including big swaths of things in Washington state. And the reason they aren't around anymore is because their charter's timed out, which is why we need a fifth permanent bank. And what I would say is these banks were very successful. They really boosted the economy in times of crisis. And other countries around the world like this model so much that they have permanent banks in place to finance their infrastructure. Europe has an international one. Each country in Europe has their own individual one. The Japanese, the Korean, the Canadians, the Australians all have banks. China has three of them. And that's how they were able to build 27,000 miles of high-speed rail and a water grid all across the country and lift 800 billion people out of poverty in just a very short time. This model really does work, both to regenerate the economy and to make sure that there's income equality and equitable growth. So again, this operates just like any commercial bank, even though it is a public bank, and lending for infrastructure. So the model of how we have to open this bank is we have to get it adequately capitalized. That's money that the owners of the bank invest into it in order to backstop the loans in case the economy downturns or anything like that. To do that, we use Alexander Hamilton's method for the first bank of the United States. We go to the private bondholders, or the private holders of treasuries. There's about $29 trillion of them out all over the world. Ask would they like to sell a small portion of those bonds into the NIB in exchange for preferred stock. That preferred stock will yield a dividend about 2% higher than the bonds that they're holding right now. I know that there's a lot of fluctuation in the bond market right now on account of Moody's downgrades and tariff woes and trying to get a budget agreed upon. But the beauty of the way the bank is designed is it's just giving them an incremental boost on their earnings. It doesn't have a fixed rate of um, interest that it'll pay on the bond on the preferred stock. So that extra 2% interest comes out of earnings from the NIB's loans. They have a certain interest rate on them, and the beauty there is that there's plenty of money left over once we capitalize the bank and pay interest, this little increment of interest, is that we can have a lot of money left over from the bank's normal operations to cover all of it so that it does not require any infusions from the federal budget to run this bank. That's the beauty of it. Takes no new federal taxes, spending, or debt is needed in the operations of this bank. It's just self-sustaining. And then, like any good bank, it goes on to give out loans in exactly the same manner as any commercial bank, same accounting software it uses, same banking rules, creates money each time it gives out a loan. I mean, your good friend Ellen Brown has done so many articles on how this works. The all commercial banks operate this way, and this bank is no different. And then the loan terms are great for the borrowers, low interest rates, flexible repayment terms. Borrowers are state and local governments. Any public entity that that owns a bit of public infrastructure can come in directly to the NIB and ask for a loan. We cover 5 trillion in project loans in 20 hard infrastructure categories. These are the same ones that were included and described in the 2025 ASCE report card. They include amounts of extra money that's needed in order to repair transportation systems, water systems, upgrade the power grid. We added 4 categories of our own we also think are critical. High-speed rail everywhere, all across the country, including Cascadia Rail. Broadband to reach remote, rural areas or inner city areas that don't have it. Building affordable housing. This is a big one for Washington State. And the way that the NIB will do this is to have its own internal subsidies so that we can make sure that we're keeping housing affordable for those families that need it the most. And then large scale water projects in areas where we grow our nation's food. If we don't do that, then food prices are going to spike. Not only can we fix infrastructure, but we really can reboot the economy, have the bank's operations directly and indirectly create 25 million new great paying family sustaining wage jobs. The workers must be paid high prevailing Davis-Bacon wages, and then they'll get full benefits with those. This bank will direct the investment into infrastructure. That's another beauty of it. It won't get the investments won't get lost in budget fights or budget cuts or getting upstaged by defense spending or anything like that. This bank is off budget, carefully defines what it'll lend for. It's long term, so we won't have on again, off again funding like we're experiencing now. It does not require any new federal taxes, spending, or debt. Should appeal to fiscal conservatives. It reshores American manufacturing, probably one of the best ways to do it through the Buy American construction clauses that are in it. It will double GDP growth. I'll show you that in a minute. And that when you have that, then you're bringing in new revenues to pay back the loans. It'll reach the working class, which are the ones who cast their votes last November and decided that this economy was not working for them and voted in the opposite direction. It might swing back again, but if we don't solve this income inequality problem with these great paying jobs, it'll just swing back again in the other direction. This bank will reduce the cost of inflation, especially the cost of housing. So this is what, in a picture, a national infrastructure bank will do by directing the investment into infrastructure spending. This is, of course, the Great Depression right here. The last time we had a bank like this was the Reconstruction Finance Corporation. This is when it got started up and running complementing what the budget was spending, but putting people back to work and bending, building the Hoover Dam, the Grand Coulee Dam, all of these things, construction projects that put people back to work, and then growth just exploded. Then it exploded again when we were gearing up for World War II, and then came back down again, of course, when all the war was over and all the soldiers came home. But during the lifetime of that bank, economic growth, adjusting for inflation, was averaging 5.5% per year on average during the tenure of that bank. And then after that, compare that to the last 20 years from going back to 2020, 2000 or so, it's only averaged 2.1%. And the difference between this and this is investing or not investing in infrastructure. And we really haven't done anything on that investment since the Eisenhower administration when he started the Highway Trust Fund. So the historical record is proof positive that we can grow the economy if we do budget cuts. And here's an example of what happens when you do budget cuts. This is the little one mistake that FDR made back in 1937 when he listened to the fiscal hawks and the hardliners that said, cut, cut, cut. And they cut the budget and they rolled back the spending of the RFC. And this is what we had, a big, huge depression coming way down here and lasting this long. All these gray areas are depressions. And when he realized the mistake he made, he ramped up the RFC spending, he ramped up the budget spending, and we had this phenomenal recovery. So historical record shows that cuts don't work, but investments in infrastructure do. And without the RFC, we wouldn't have geared ourselves up for World War II. And then the afterglow, even after the bank closed down, there was still a lot of growth in the economy. And this is when it slowed down over here. So an economic modeling today shows that we can do the same thing even under the full employment we're experiencing right now. Finally, I would like to say something about how the NIB will complement state public banks, such as the ones you're working on to get started, and local banks, local commercial banks, and bond markets as well. And that's because the NIB will finance the big things, including the things that go across state lines, the big projects that those smaller banks can't afford. But meanwhile, those smaller banks can take on all of the economic extension of economic activity. Like every time a small business needs to go to the bank to get a loan so that it can compete for a project that's being financed by the NIB, that will grow banking use, and also the bond markets will grow as well. That's what was proven during the last bank, the RFC. So, and there are even clauses in the NIB on how this complementary process can take place. The NIB will be the lender of last resort, the last bank that will come on to fund infrastructure projects that the smaller banks can't do. There are lots of ways that they can financially help each other. The local banks can act as a storefront for the NIB because they're in the locality. They can assist borrowers to track their financial statements, and bond dealers to provide bonds for a fee, and then the NIB can come in and do the large lending. So we expect a lot of complementarity, which will stimulate the banking sector, including public banks. So just to give you an example, what's in it for Washington State? Out of the $5 trillion, the state could qualify for up to $91 billion over 10 years to cover all of your infrastructure financing gap in the state. It will create nearly 500,000 new great-paying, family-sustaining wage jobs in the state. It'll fully finance big ticket items like Portland, Seattle, high-speed rail from Portland, Oregon, all the way up to Vancouver, British Columbia. That's on track, but it doesn't have financing yet. It didn't get any financing from the bipartisan infrastructure law because there wasn't enough to go around. So that's an example of we can do full coverage for that line. Replace Seattle's aging bridges. That needs $6 billion. bridge maintenance is a big problem on those massive bridges. It can build a high-speed rail. Your Department of Transportation came up with a wonderful study that showed that it's much more affordable to build this high-speed rail than it is to fix bridges. For example, the one that goes along the border over the, I think, the Columbia River, that would need, lane widening, and altogether would be a much less affordable project than the high-speed rail. It will promote inner city community development, build lots of affordable housing, train up workers in these needed fields, improve state and city finances because the economy doubles and the growth rate doubles, and that brings in new revenues. And again, it can complement proposed state banks. So with that, I'll stop. I know I gave you a lot of material there, but if you have any questions, you can, I'll let the moderator pick them for you, and we can discuss what other information you would like to have. Marco?
Great. Thank you so much, Alphecca. If you have a question, we have plenty of times for discussion and question and answer. If you have a question, please just use the raise hand function in your reaction section for your Zoom. I'll demonstrate, and then I will call on them in the order that I see them, and you'll be able to ask a question. And we do have sufficient time, so you can feel free also to make a comment on the presentation as well. But now the floor is open to anybody who would like to ask any questions or need any elaborations on the National Infrastructure Bank.
Or on the economy too. If you have any
Yeah,
questions about the latest budget fiascos or anything like that, I can.
or if anybody wants to know about how the trade war is working out, the trade war versus industrial policy.
Or the effects on farmers, or the effects on any particular class.
Oh, so I see a question, hand raised from Diane. Diane
Yes,
Ramsey, go ahead.
yes. And I apologize. I have a husband with dementia who interrupted your presentation just as you were talking about the financing. And I think I heard you say something about private investment, and maybe I didn't, but
So
if you would not mind elaborating on that, how the
So was the
financing.
question with regard to how we finance the NIB, or
Yes.
how bond markets finance infrastructure?
No, how would the bank itself be financed?
Yeah. So the beauty of this bank is it operates like a commercial bank. So the only thing you need to do to get it started is to get this capital into the bank. And to do that, we use Alexander Hamilton's method. We go to the bond market, and there's about $29 trillion in bonds around the world. There's lots and lots of them, even though people are dumping them right now. There's still plenty around because that's all of our national debt that's in public hands. Ask what they like, and that debt trades around, swirls around in something called the secondary market, which is just a bunch of brokerage houses that sell treasuries or act just like a stock market brokerage company like Schwab, but there's one for a secondary market for treasuries. So it's really easy to buy and sell treasuries around the world. And so we would just offer up to buy treasuries in exchange for preferred stock in the NIB. We'll pay a little extra on the yield. A lot of people have told us that they would be interested in that because it's AAA rated paper. There's a government guarantee on the bank, and they could really use even the extra 2%. For example, pension funds haven't got enough money in their pension funds to pay their pensioners in years out. So they need to earn a higher rate of return that is risk-free. So they would be very interested in investing in the bank. A state rainy day fund holds all of its savings in treasuries, and it can borrow from the NIB for an infrastructure project at the same time that it is investing in the bank to capitalize it. So the capitalization we think is an easy process. It'll happen fast. For the first Bank of the United States, when we had just won the Revolutionary War, we were in debt up the yin yang. So Alexander Hamilton and George Washington collected all the debt from all the states into the federal government and then used that debt to capitalize their first Bank of the United States. And guess who the holders of the debt were? The British that we had just won the war from, the French, who were our good friends and helped us to win the war. But they all figured it's better to invest in the United States, even though our economy didn't look too good, because they wanted to make sure that they would get their debt paid back eventually. And they capitalized that bank in one day. So we think that'll happen pretty quickly. So that's the capitalization part. And then the lending part doesn't need
Well,
any money coming in from anybody else. It
right,
actually,
right. Excuse me. I do understand the lending part, but to just summarize, is this private sector investment plus
yes, this,
public?
I forgot to tell you how the bank is, under today's, under today's laws, there are a group of financial institutions that are owned by the federal government. Some of them are wholly owned, like the Export-Import Bank that really stimulates Washington's economy by helping to get sales of Boeing aircraft. And then there are mixed owned enterprises that are half owned by the federal government, half owned by private entities. An example of that is the FDIC, the Federal Deposit Insurance Corporation, which is part owned by the commercial banks and part owned by the government. And then there's some other, government-sponsored institutions. But all of those are defined under a law called the Government Corporations Act. And so this bank, by its definition, would be mixed ownership, government and private. But the private part does not have any voting rights in the bank. They only get preferred stock with a guaranteed rate of return, and they have no voting rights in the bank. So the bank essentially is controlled by its board of directors and by the statute itself, which defines how and what it will lend for. So did that answer your question?
Yes, thank you. And I guess that's a bit different from what our Senator Hasagawa had been proposing. I think his proposal was just purely public financing, state financing.
Yeah.
And please correct me if I'm not getting that right, but I think it's just
I
public
can,
financing and public access.
yes, I can elaborate on so here in Washington State, there is also a bill that's been introduced by Bob Hasagawa. There's been a variety of different versions of this, but there is an attempt to create a public bank here in Washington State. That bank, the latest version of that is more based on the Bank of North Dakota. The Bank of North Dakota is the only state-owned public bank in the United States. So a lot of people are surprised at that. They think of North Dakota as a pretty conservative state, but during the populist era, aggressive populist era, members of the nonpartisan league got a hold of the governorship and the legislature, and they were to create some pretty unique institutions, and one of them was the Bank of North Dakota. How that doesn't have financing through the private sector. It doesn't, what it does, it doesn't ask the private sector is holding on to government bonds to deposit them into the bank. Instead, how it operates is that it takes the taxes and revenues from the state, which currently for all other states, what they do is they deposit it into a variety of private institutions, private banks, and instead is it charters a public institution and puts the deposit there. All right. The bank in North Dakota did also initially have to create some capital, so it did take out a bond. So you have to have some type of arrangement of the capital. But without getting too much into specifics, a lot of the lending that from the institution means the capital requirements would be very, very low because of the type of lending they engage in. So it
Right.
would do it.
Yeah, I just was trying to see what the distinction was
Yes,
between this and that. And I'll do some more of my own research, but thank you.
yes. The
that
main
clarified it.
distinction is that the bank on Washington level would be a public depository institution for the state and
Right.
also local governments. Local governments could also join it as a member and deposit their taxes and revenue into it
Well,
too,
yeah,
to support it.
yes. Okay, yeah. Thank you. And if
Mhm.
you would not mind lowering my hand, I can't find
That's
the
okay. I'll
lower.
get it for you.
Thank you.
I control that. And then I see Kimberly next up on the list. Kimberly, go ahead. Kimberly Sims.
Yes. Hi, Alphecca. Uh,
Hey,
hi. A question I've had for you for some time has to do with rail. And when you talk about high-speed rail, are you talking about, rail that has a faster average speed than what we're dealing with now? Like something about 120 miles per hour. Or are you talking about like the bullet train in Japan, which goes, 180 to 200 miles per hour? And I'm asking because I'm part of the Climate Rail Alliance here in Washington State. And they are under the impression that the National Infrastructure Bank would not fund what they want, which is just a higher speed rail, not the ultra high speed rail. Could you clarify that for me?
sure. So I think our objective would be to try and have a high-speed rail system networked across the country to relieve the interstate highway system, airports, truck traffic, and those kinds of things. So it has to move a little faster. And plus, we're a big country. But we also need, we can't stop at every single, that can't stop at every single town because that would slow the thing down. So we would also need to still rely on our passenger rail system. We wouldn't necessarily be funding freight rail because that's a different entity, a different thing. But they have to get their act together on managing their processes better because they can only move really heavy things at very slow rate, like coal or soybeans or whatever, but they can't do the fast freight that's needed for a lot of our imports. And as a result, 65% of all that heavy transportation for freight is gone by truck. And that's very polluting, emitting as well. So that has to all be straightened out offhand. Our biggest objective for the NIB is to build transit, mass transit, passenger rail, high-speed rail, and we can even use the high-speed rail for some overnight light freight deliveries, express freight deliveries, to make it affordable, to get it up to speed. But there's a whole nest of things that are, and to show you how energy efficient it is, I would really recommend you take a peek at the U.S. high-speed rail website because there are a lot of great factoids on there. And we've also talked to some other people that are working on high-speed rail that have worked in Europe on making economic extensions out of it, like the whole businesses around train stations and hooking them up to logistics centers. Right now, for example, we just talked to some people that are outside of Atlanta, and the I-75, which is an interstate, runs right through their town, and the thing is a parking lot. And the reason it's a parking lot is because all of the tractor trailers go from Savannah up to Atlanta to a logistics center that just snarls up everything. And when you drive through the center of Atlanta, half of the traffic is semi-tractor trailers. And this is typical. It's also, we see it a lot all along the East Coast. And to fix all that and to build high-speed rail, we need to somehow uh, get a new management from Amtrak. They own the Northeast Corridor line from DC up to Boston. A lot of this track was built in the Civil War. The track is tilted in the wrong direction. There are 2,900 bridges from DC to Boston that nobody knows who owns them, and they don't certainly don't have the money to fix them or to straighten out the tracks because we can't go fast if the tracks are too curvy. So there's, by way of saying roundabout, there's a lot of work to do to build fast, high-speed rail. We can do it. The Chinese are an example. They built with the economy in mind, their high-speed rail systems along the Belt and Road Initiative to trade with other countries. And as a result, that's how one way they expanded their exports to other countries. And they also built their high-speed rail to move workers back and forth from rural areas to the cities so that they wouldn't have people migrating to cities to get close to jobs. And all those things we need to do. We need a clear, easy transition from one rail system to another rail system to move passengers around more effectively. And we need to make economic spin-offs from all that too. So there's lots and lots to be done on the high-speed rail side.
Okay, that helps a lot. And if I understand you correctly, it sounds like the NIB could fund, say, additional building of tracks, that run parallel to Amtrak's track or to, Burlington Northern or whatever, and also could be used to straighten out curves, just to increase efficiency between the stops.
Yeah, we've got like there's a rail line in Southern California that's about to fall into the Pacific Ocean because it's on those cliffs. So there's a lot, and then we have to drill through tunnels and tunneling, especially in around residential areas. There's lots and lots to consider. It'll be costly, more costly than Europe does it, maybe twice as much. But the faster and the better we get at it, just like the competition that was used for the Transcontinental Railroad before they hammered that golden spike and got one railroad company to compete with the other to do it faster. I think there's lots we can do. We will learn as we go along, but we need to have efficient management to bring our construction costs, not only for high-speed rail, but also for subway systems down because we're paying more right now to build that stuff than other countries around the world.
Thank you very much.
Okay, thank you. The floor is open if anyone would ask another additional question.
So I do want to tell you about my newsletter coming up, which is going to be a lot of it on the budget machinations. But the bottom line of this month's news, economic news, is that infrastructure financing continues to be cut from the budget, and everything else is being cut too, especially social safety nets. SNAP is being cut. Section 8 housing subsidies are being cut. Medicaid is likely going to have big chopping block in order to make room for the Tax Cut Act, which will mostly benefit the rich. But it doesn't look like they can do this. They have great hopes they're adding on a $4.5 trillion tax cut act, and they're only going to be cutting out from existing spending about 800 billion that they can get out of the discretionary. So that means the deficit will keep on growing. It's been growing at 2 trillion a year over the last several years, more under the Trump 1 administration than under the Biden administration. But finally, this is making financial markets really nervous. And today they sold again off, a big sell-off after the Congress stayed up all night long trying to agree on a budget and couldn't quite do it. And they're now really worried about our debt, and we're paying more interest on the debt as a result of the trajectory of where we're going than even defense spending. And it could get worse than that. So everybody's very nervous. This is how I worked for 25 years at the International Monetary Fund. This is how countries die. So if we don't do something about it, we're going to be in big economic trouble. We are now contracting the economy on account of high interest rates. And the worse the negotiations are on the budget, The higher the interest rates go, we're contracting the economy on budget cuts. We're contracting the economy on the effect of tariffs. And now this uncertainty in financial markets means that the interest rates are going to go even higher. It's a very bad scenario. It could slip us into a recession. If that happens, it becomes like the swirl in the bathtub. It goes down and down. As far as I'm concerned, as a macroeconomist, the National Infrastructure Bank is the only cure. The only cure. It's amazing. We can't do it any other way. We cannot cut our way into prosperity and growth. It does not work. But if we invest in the real economy, then we can really turn all of this downward spiral around. And at the same time, we could really help the working person who is really hurting in today's economy, even before Trump 2 came along. We over the last 20 years, we haven't been paying attention to the average worker. We've shipped jobs overseas. This will directly help them. How? With great paying jobs and more affordable housing, just to start, and preventing food prices from skyrocketing again. So it's really a great tool, something we really need right now. If we don't do it, we're going to be in a real pickle. So that's my little macroeconomic speech. But if you don't get my newsletter now and you're interested to read it, I do. It's quite long because there's lots of news, like 35 pages of it, which I try to summarize the articles. And then I summarize the whole thing, the whole big picture. If you would like to get on there, you can send me an email to add you on to the 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 newsletter list, and that'll be coming out at the end of the month.
Any further questions? I'm not seeing anyone raise their hand. I would like to use up some of our time. And Alphecca, I'm wondering if you could just elaborate more on why you think that the National Infrastructure Bank is the best solution to try to get out of this downward spiral. Why couldn't we just increase spending if the economy takes a downturn, or why couldn't we just introduce more taxes to help us with the deficit? What do you think is so unique about the National Infrastructure Bank so people can really
Well,
grasp,
right.
your importance and your
Uh,
perspective?
yeah, the big picture over time is that we have cut out infrastructure investments in public infrastructure from the normal three sources. The federal budget is cutting them out. Every time Republican administration comes in, their only objective is to cut spending so that they can give tax breaks away. Not for that help people so much as, although Trump is trying now to give some tax breaks to middle class income earners, since he's gotten a bad rap for it. But it hasn't worked. The infrastructure, and then we have the problem of defense spending, which crowds out everything and causes when you try and do social programs and defense spending at the same time, you spark inflation, as happened in the 70s, and then you go into recessions, and you don't create jobs that way. So, and then we've had the financialization of the economy, where banks would rather speculate and bet in the stock market than invest in their own companies. In fact, you know what they use their corporate tax savings to do? Buy back their stocks. They don't use it to invest in their own companies. So they're not investing even to grow the economy that way, because when you're a company and you invest in capital, that's one of the factors that leads to higher growth. But they're not doing that. So altogether, we've got a really big, and then we've had growing income inequality, which is the source of all, since the rate of return on betting in the stock market is higher than the rate of return of investing in your own company. That means that there are less workers to be applied in doing investments in the real sector. We're not investing in the real sector. And this is a way to turn around all of that. In fact, I've got a slide, I hope I can find it, which shows you proof positive that this is the only cure. I showed you the previous slide that we cannot cut our way into prosperity. That just doesn't work. FDR learned that lesson really quickly. But the debt problem is here we go. Here's all of our sessions over time and what happened to our debt. And what the lesson learned here is during the Great Depression, we invested in our economy because we had the Reconstruction Finance Corporation to help do that. We could not do it through budgets. We had to use an off-budget bank to do it. And then we had the investments that the RFC made to mobilize and get us ready for World War II. And then by the end of the war, our debt as a percent of GDP, which is the way we measured it, was really quite high. And then it plunged from 110% of GDP down to about 30% of GDP in just 30 years. How did that happen? We didn't pay the debt back. But we grew out of the debt. And the reason we grew out of the debt was because of all those investments we had made in infrastructure. Now look where we are on the debt and scheduled to go way up here to 166% of GDP. The only way we can turn this around is to invest in our economy using an off-budget bank, which will pull this ratio down. The debt won't be paid back, but it'll be more bearable because the economy will be making more money. And that's the only way to pull this down. So we have a serious, serious debt problem now standing at $37 trillion. There's a debt clock on the internet that's scary to watch the thing going up and up and up. And we're paying more interest on the debt. And the more we finagle around with these poor budget ideas, then the debt holders that are holding all of this are going to say, look, I'm not going to hold many more US debt if you can't keep this budget under control. And if you want me to take on more debt as the deficit grows, you're going to have to pay me a higher interest rate. That'll jack up interest rates for everybody, not just the government, but even if you go buy a car or a washing machine on credit, it's going to be bad, and that'll also push the economy into recession. So it's a very scary picture. I've seen countries around the world go into this death spiral. It's called a death trap spiral. The biggest example was today was that I know of was Zimbabwe, where their inflation rate was like 1,100% a month. I mean, they would change the prices of things in the grocery store from the time you walked into the grocery store until you left and had to pay for your goods that you were buying. I had personal experience. My grandmother was Danish and my grandfather was German. They went back to Germany after World War One, and they took all of their dollars and converted them into Deutschmarks. And by the time Deutschmark lost all of its value, they lost all of their savings. And people were going to the grocery store with wheelbarrows full of paper money in order to buy a loaf of bread. That just shows you how bad it can get. The same examples in Greece lately, about 5 years ago, in Argentina, about 4 years ago. This is how you go seriously wrong. We are the nation. We are the nation of the world with the reserve currency of the world. Everything is done in dollars, and what that means is that all of these dollars are held outside the country. If the only reason that the dollar stayed high over the last 4 years is because 70% of the world that was investing in the U.S. stock market because they thought it was such a big run up. If they decide that the stock market is not a good bet and they want to get rid of their dollars because they're afraid that inflation is going to come in or the government can't pay back, can't honor its treasuries that it's already issued, they'll get rid of their dollars, and then we will really see trouble because the dollar will crash as the pound sterling did under George Soros when he killed the pound sterling. And then you're really going to see how expensive that'll make tariffs look like a walk in the park because everything we import will just go up dramatically in investment. So the whole thing is linked, and this is the only way to get out of the problem is to use this bank to invest in infrastructure. Every dollar you invest will create three new dollars in the economy. And that will reach that investment and the benefits of the investment will reach the very people that we need to help the most, which are working Americans, don't have a college degree, essentially. So that's why I think it's
Well, thank you.
and
Thank you. We
economic
do have some,
modeling is the same.
yeah, we do have some time left if anyone would ask any other questions or have any comments before we wrap up. All right, I am seeing none. So I just want to thank you again, Alphecca, for the wonderful presentation and discussion on the importance of the National Infrastructure Bank. Like all Washingtonians public banking's presentations, you can find this on YouTube. So if you want to go back and observe it, you'll have that opportunity or share it with your friends. We really appreciate it. All right.
Right. Super.
So I just want to thank everyone again for coming. And if you want more information, please visit our website. We regularly put out our newsletter events about the Coalition for a National Infrastructure Bank, along with other events related to public banking here in Washington. And for those who came a little late, I am put also in the chat the two events that we have coming up on June 24th and June 26th. All right. So I thank everyone for coming. Please have a great evening.
Thank you for having me.
Yes, of course. Thank you.